Hello investors and future investors, welcome to the channel. For today's video, I'm going to show you how to start investing even if you are new to the stock market or even if you are trading with a small account portfolio. I'm going to give you a detailed step-by-step walkthrough of how you could go ahead and get started with investing in order for you to become financial free in the future. Now, if this sounds like something that's going to tickle your fancy, then I would like you to go ahead, like the video right now, and make sure to subscribe to the channel in order to get more content of this nature. Now, for those of you who have not already, before you go ahead and watch this video, it would be a good idea for you to check out the video right before this one, where I actually showed you exactly how to get started with investing. And I show you how to diversify your portfolio. And we went ahead and we purchased 5 stocks. So this video is going to be a continuation of that previous one. Now, for those of you who have not gotten a chance to catch that video, what we did is that we start off the account portfolio with only $65. And the reason for that is that I really want to show you that it does not matter how much money you have. You don't have to have thousands of dollars in order for you to begin investing. So we did go ahead and start off this portfolio with $65, and I showed you how I'm going to go ahead and just buy different stock using that amount only. Now, what we're going to do, I'm going to go ahead and give you a quick review of the previous 5 stocks that we bought in the previous video. And then after that, I'm going to show you the additional stocks I'm going to be adding to the portfolio. Now, the first stock that we added last week was none other than MO, and that is for Altria. For those of you who are not aware, Altria is in the cigarette and tobacco industry. So if this stock does not suit your portfolio values, then feel free to go ahead and replace it with something else. Now, as you can see here, the current share price of Altria is $58.05, but our average cost when I did purchase some shares was $59. The amount of shares I was able to buy was in around 0.084, and the amount of money I spent for the shares was just $5, and the current market value of those shares is 4.92, meaning we're down on the amount of money we invested initially. The amount that we're going to be down, and this is only for just 1 week, the amount that we're down is going to be 1.61% or 8 cents. So that was the first stock we added to the portfolio, which was the ticker MO, and the company name was Altria. Now, the next stock we added to the portfolio for last week in order for us to start investing was Meta. And the name of the company is going to be Meta Platforms, whereas the ticker is going to be META. The current market value is 671.8, and our current average cost is 639. So we definitely up on that stock. The amount I invested initially was $5, like all the other stocks in this video, and it's up 0.25. The percentage is up is going to be around 5%, as you can see down here. Now, what I want you to focus on for the duration of this channel and all these videos, I want you to focus on what's known as the ROI, or your return on investment. Your return on investment is going to be the percentage that you got back from the initial amount of money that you put in order to invest. So the initial amount of money I put forward for Meta is $5, and the amount of money I got back was 0.25. If I divide the 0.25 by the $5, I'm going to get a 5% return here. So my ROI on Meta is 5%, as you can see here. Okay, that's the second stock that I added to the portfolio last week. The third stock I added to the portfolio was OSCR, and that is the ticker for Oscar Health. Now, in the previous video, I did break down why I added these different stocks to the portfolio. And the reason why I added this one to the portfolio is because I want this one to have exponential growth. Meaning, I don't expect this one to perform like the others. I expect this one, the trajectory, to be up over the next couple of years. Now, the current share price is sitting at $6.80 right here. But my average cost is $17.40, so we're definitely down on this one. My ROI on this one is going to be negative 3.45%, or my average market value is 4.83. So Oscar Health, I'm down on that stock. The next stock I went ahead and added was Amazon, and that ticker is AMZN, and this one has been in the news lately. The reason why I went ahead and added Amazon to the portfolio is because Amazon is going to give us that stable growth, and it's also considered a value stock. So the current share price of Amazon is $229.85, whereas our average cost is $233.33. So we're down on this one as well, and the ROI on this one is negative 1.45%, or the current market value is 4.93. So I'm down 7 cents on this one. Now, the last stock that I added to the portfolio last week before we go ahead and jump into our new additions is going to be CVX, and that is the ticker for Chevron. The reason why I went ahead and added Chevron to the portfolio is because Chevron is one of the oldest companies in existence, and this one I added to the portfolio primarily as a dividend payer. Now, dividend payer do not give you as much growth as other stocks, but it pays you consistent dividends over time. The current market share is 150.81, whereas our price, our average cost is 151.7, so we're down around 3 cents or an ROI of less than 1%. Now let's go down. I want to show you this about Chevron, why I added Chevron. Chevron has been founded in 1879. So this stock has a very, very, very nice history. It also has a very nice, consistent history of paying dividends. And the dividends here you can see is 4.56%. So that's one of the main reasons of me adding this to my portfolio. So what we did last week's video, we started off the portfolio with $65. We went ahead, we purchased 5 stocks, and we end up spending $5 per stock, which was we spent a total of $25. So we're going to go ahead now and add 5 additional stocks to the portfolio, which I am going to keep in the portfolio for the long-term future unless something fundamentally changes. So the first one we're going to add to the portfolio today is going to be none other than Microsoft, and that ticker is going to be MSFT. Now, most of you probably have heard of Microsoft before, but if you haven't, this one is a nice value play and it will give you some growth. The growth is going to be consistent over time. It's not going to be exponential like 2 stocks that I do have in the portfolio. At the end of the video, I will give you a roundup of all 10 stocks that are in the portfolio, so don't worry about that. Now, the current share price of Microsoft is 482.13. And I'm going to go ahead and purchase $5 worth. So we're going to go to the amount right here. We're going to buy $5. We're going to hit review order. We're going to go to buy in order to execute. And then you see it says here MSFT order queued. That just tells you the market is currently closed and this order is going to be executed whenever the market opens. Now, like I mentioned, Microsoft is a value play and it is going to give me some growth, but the growth is not going to be exponential. So I definitely have this in my portfolio as a value play. All right, the next stock I'm going to be adding to the portfolio is going to be none other than O, and that is the ticker symbol for Realty Income. Now, Realty Income, I'm going to add it to the portfolio as a basis for dividends as well. Just like Chevron, Realty Income pays some really good, consistent income, and it has been doing this over the years. Now, the current share price of Realty Income, as you can see here, is $58.50. So although we cannot afford to buy an entire share, we're going to buy fractional shares like we have done with the other stocks. So let's go ahead. We're going to buy just $5 worth. Let's go to review. I'm going to go to buy, and then that order is queued as well. Like I did mention, the main reason to add this to the portfolio is because it's actually a dividend payer and it's been consistent. As you can see here, the dividend is 5.48. The dividend here is even higher than the previous one we had. Now, Realty Income Corp is a real estate company, or what's known as a REIT, R-E-I-T. So it engages in generating dependable monthly cash flows from a consistent and predictable level of cash flow from all its operations. Pretty much what Realty Income does, it's a real estate corporation that actually has assets that those assets are actually rented out. The money they receive from the rent every single month, they go ahead and use that to pay the investors. And that's why they are able to pay these consistent dividends. Now, because they're known as a REITs or a real estate investment trust, they're mandated by the state in order to pay a certain amount of the income that they generate from their operations. So again, that's one of the reasons why they pay such high and such nice dividends. Now, the next one we're going to add to the stock is going to be none other than NU, and NU stands for New Holdings. New Holdings is in the banking sector, and it's sort of similar to SoFi, except for this one is offshore. They have not been in the United States as well. They have gone ahead and they have applied to start operations in the United States, and I think they're going to be doing really, really good here. The reason for me adding this one to my portfolio is because I want to see exponential growth from this one. Just like Oscar, New and Oscar, I expect to see exponential growth from both of them. I think the current share price now is definitely very reasonable, but don't worry about that right now. As the video goes along, I'm going to show you how to value these stocks and how to see whether the share price is at a decent level or not. So the current share price is 16.71, and just like the others, we're going to go ahead and just purchase $5 worth. Let's go to review once again, and then we're going to hit buy, and then that should be queued up. Now let me go down just to show you a little thing about New Holdings. Okay, so it's right here. So New Holding Company, which engages in the provision of digital banking services. The company was founded by David, and this is the main thing I want to show you. It's actually founded in the Cayman Islands. However, the company operates in South America, basically between Mexico, Colombia, and Brazil. Most of their business is within those three countries in South America, although they were founded in the Cayman Islands. So like I said, I'm expecting growth from this company. Now, the next stock I'm going to go ahead and add to the portfolio is going to be a very popular one amongst beverage drinkers, and that's going to be PepsiCo, and the ticker for that is going to be PEP. Now, the reason for me adding Pepsi to my portfolio is, once again, Pepsi is a very good and consistent dividend payer. And I don't think this stock is going to go out of style, out of trend anytime soon, because people always want a refreshing beverage. No matter if the economy is doing good or the economy is bad, people always have to quench their thirst. So I'm going to add Pepsi. Now, before I go ahead and buy, I want to show you the dividend that it pays, because it pays a very decent dividend. The dividend here is 3.83%. Now, the reason why I gone ahead and added Pepsi, and most of you guys are going to be saying, why didn't I add Coca-Cola instead of Pepsi, is because I already have Coca-Cola in my big account portfolio. So I want to make sure I try to keep the portfolio separate with separate stocks, just so I could have a comparison. So with the Pepsi, we're going to go ahead and we're going to do the same thing, which is going to be $5. Let's go to review. We're going to go to buy, and that order should be queued. So now we're going to go ahead and add the last stock to the portfolio, and this one is a controversial one. It's a bit confusing. I'll show you why, and that's going to be Google. Now, Google has two different classes of shares, which is the Alphabet Class A and the Alphabet Class C. These two are exactly the same. They're the parent company of Google. The name is just Alphabet. Now, the difference between the GOOGL and the GOOG is simply this one here to the top, the Class A. It allows you to get a voting rights. That's pretty much it. And the Class C does not allow you to get voting rights. That's it. Do not worry about voting rights and stuff right now. I will explain all those things to you as the channel progresses. So we're going to be going with the Alphabet Class A, GOOGL. Let's go ahead and open that up. And you guys should know Google by now. Google has several businesses under its umbrella. And one of those businesses that are under its umbrella is what you're watching right now, which is going to be YouTube. It also has the Google search engine and lots more. So this one is a no-brainer in order for me to add it to the portfolio. One of the other reasons I'm adding it to the portfolio is because Google, like a couple others in the portfolio, is going to be known as a value stock. Value stock, what it does is that it actually keeps your portfolio stable. Now, from Google, I am going to be expecting some growth, but I'm not going to be expecting as much growth as the other two, which is going to be the New Holdings and the Oscar Health. So this is the next one we're going to be adding to the portfolio. So let's go ahead. We're going to purchase those $5 worth of shares, and then I'm going to give you a quick portfolio review. Okay, so that should be 10 stocks in our portfolio. Let's go ahead and go to the home. And then we're going to see what we have. Okay, good. So we did go ahead and invest an additional $25 today. And you can see down here, the portfolio value is now standing at $15. So we initially started off the video with $65 account portfolio. We invested $5 in 10 stocks, which is going to give us $50 in total. And then the difference between the $65 and the $50 is going to give us the $15.07 here. Now, it's extremely important whenever you are investing, always make sure you have this money here. We refer to it as liquid capital. And the reason why you always want to have some liquid capital is that as you grow in your investing journey, you're going to need some kind of liquid capital in case any opportunities present itself in the market. The next reason you're going to need liquid capital is that when the portfolio goes to above 2,000, I'm going to be adding what's known as margin to the portfolio. What margin does, that margin allows you to borrow against your own money and your own stocks you have in your portfolio, and you could also use that to trade. So whenever using margin, you must always have a very healthy level of liquid capital as well, just so that you don't break between your margin percentage. And again, as the videos progress, you're going to learn all of these things. So here we are on the stocks that I have invested in. And as you can see, the ones with a little plus sign It just tells me that those are going to be added when the market is open. So a quick rundown of what we have added to the portfolio is going to be the ticker O, which stands for Realty Income, the ticker MO, which stands for Altria, Meta, which stands for Meta Platform. We have OSCR, which stands for Oscar Health. We have AMZN, which stands for Amazon. We have CVX, which stands for Chevron. We have MSFT, which stands for Microsoft. Then we have PEP, which stands for PepsiCo Company. We have NU, the ticker that stands for New Holdings. And lastly, we have GOOGL, which stands for Google Corporation. So investors and future investors, those are our 10 stocks that we're going to be keeping in the portfolio for the long term. And we're only going to be making changes if something fundamentally changes about the stock. Now, for the next video, what I'm going to be doing, I'm going to be going through each individual stock here and give you a walkthrough. And that's also going to help you to evaluate stocks so you could make your own decision of what stocks you want to add to your personal portfolio. The whole purpose of this channel is to start off with $65 and add $250 on a monthly basis in order to grow the account portfolio. The $250 that's going to be added on a monthly basis, I'm going to show you how to go ahead and invest that in your diversified portfolio that we have chosen automatically, so you don't have to think about this every single day. I'm going to show you the set it and forget it investing strategy. Now, if you guys have any questions about how to begin investing, how to choose stocks in order to invest in, just let me know in the comments below. Also, if you guys have not already, now will be a good opportunity for you to go ahead, like the video, subscribe to the channel in order for you to get more videos of this content and in order for you to be able to learn how to invest now in order to have financial freedom later. Now, the most important thing about me making these videos is that I make these videos to show you do not need to start off investing with thousands of dollars. You could start off investing with whatever amount of money you have right now. The stock market is designed in a way right now that we are now able to invest with even fraction of shares of our favorite companies and watch that grow over time. So once again, go ahead, like the video, subscribe to the channel. Now, until the next video, keep pushing your investments.